I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market. Today, soybeans were mixed. It really was up and down. Right out of the box, we had about a 10-cent range, and the market kind of bouncing back and forth from unchanged. Prices are really cheap right now, and commercials are net long, trying to underpin this market and try to push it a little bit higher. Now, we see that there's a lot more activity happening right now, and so maybe the downtrend has finally stopped. We're keeping our fingers crossed to see if that's actually happening. But the USDA ratings is like 69% better, but weather remains a little bit of a risk, especially with the pod setting is still ahead, and we have to watch at that time. If it gets really, really hot and we don't get enough rain, there's going to be a definitely effect on the crops. We were actually expecting that this summer, but we were so distracted by the tariff talks that we kind of lost track of what was happening fundamental with the row crops as well. But the soybean trend technically is still bearish, but it seems like it could be making a turn, or at least it's slowing. Corn was steady. Overall, the trend is still down as well in corn. The USDA said that those crop ratings are a little bit are much better, and so some of the shorts are kind of like backing off a little bit. I think that there's a little bit of short covering because again, we're looking at these bargain prices, and I think with the cure for lower prices is lower prices, and now we're finding that some bargain hunters are starting to put their toe in the water and start to gobble up a little bit of these straggling futures here at these low prices. I think as we get closer and closer to the end of summer and as the weather starts to heat up, there's going to be a little bit more volatility in the market, and I think the few traders are trying to step up and get what they can while they can. Hopefully we're going to have some of these traders that have been on the sidelines come back into the market and start to participate a little bit. That should make it a little bit more healthy, and I think maybe strengthen some of the some of the trade a little bit to try to get it off the ground somewhat. It's been a long time since we've seen the prices at these levels. Wheat was lower. Now the USDA is expecting that the world wheat production to be down 3%, but overall we're still on our highs. And I know that there's been some hot weather around the world, but right now it's just not affecting us at all. Our crop ratings here in the U.S. has been pretty good. We've had rain across the land for quite a while, even though the weather has been pretty hot. So there isn't any real detection that we're going to have some serious trouble. The only problem that I look at is that if we really start to cut back on the demand and we end up with some big supplies, that is actually a very bearish number, and that could really push the futures even lower. I'm betting against that, and I'm hoping that the low is in, but the market is still sinking a little bit. Our benchmark right now right around $5, but we're a little bit below that, and so we're watching closely. I think that maybe if we can get a close above that 516 level, we could definitely turn the shorts around and everyone do some short covering, and that could strengthen the market somewhat. But we're still about 20 cents away from that, so that's the real number that we're going to start to look for. But today, a little bit of lackluster trade, moving lower. We're going to wait to see as the reports come in, and now it's going to be day to day with this weather market. That's all from the floor at the CME Group. Here in Chicago, I'm Virginia McGathey.